Hey, what's going on, everybody? Happy holidays. It is 2021, but not for long because we are on the brink of ending this whole year with a bang. And I just decided that, you know what, it's time for us to really do a great webinar that's going to recap some of the things that happen in the market, some of the cycles. I'd definitely like to congratulate many of you guys who have worked your butt off and have secured the bag in this market. So big shout out to you guys. I appreciate y'all for hopping on. I know a lot of you guys have um, countless things to do during this evening and these festivities, but you decided to stop by here. That means a lot, and I appreciate you guys for always rocking with us. And here at Markets Apprentice Academy, we always emphasize the fact that once you remain a student and having that mindset to always succeed, but always having the same energy to be coachable, that is the essential key for you to succeed in any aspect of life, because we don't get to where we're going without being coachable. We don't get to where we're going without making any mistakes. But if we didn't make those mistakes, we wouldn't know who we are. We wouldn't know how strong and resilient and persistent we consider these goals and aspirations that we have. So in essence, when it comes to this market, it shows a lot of facets of who we are. Um, Sometimes we find out how revengeful we are, how greedy we are, and how impatient we are. And all of these things, it's not really the market, but it's really us. So this is why I wanted to do a webinar for the last couple of days of the year, where we are recapping a lot of things that went down, but also just restating certain lessons so we can be more refined as our blades get sharpened every day. Okay, so we're gonna first start by congratulating one of our students who have achieved multiple six figures in the market. My guy Javon, bro, big congratulations, man. It's crazy how we started this thing, right? We met somewhere in Virginia as I was doing personal training, and then we just started talking. We saw each other's energy was genuine and God given, so we started having a conversation. Fast forward to now, so many things, man. I've traveled just to go teach this guy and his wife, and now he's got the market by the neck. So drop some sevens on the chat for sure, just to show some gratitude and appreciation, and congratulating our fellow brother. It's always good to see another Black man shine with the knowledge that's given to him, and him also just extending that knowledge because of his hunger to continue and be very profitable and consistent in the market. My guy, you have anything to say?
Remember we met at the tire shop?
Yeah, at the tire shop. That's where it was.
And you had a laptop in your hand, and I said, "That's Forex."
That's how the conversation went.
That's how the conversation
went.
Yeah.
Man, it's
so to achieve success, what you gotta, guys, you have to get comfortable with seeing red. And when you don't fear seeing red, you will definitely see blue. As long as you know that, then you can win in the market.
Fact.
And don't get too comfortable, because the market can make a reversal or whatever at any given moment. But yeah, I appreciate all you done, man. We appreciate it.
Yes, thank you.
No problem. No problem.
We spent days in here eating slices of vegan pizza, man, and staring at the big screen, but we learned that market.
Oh yeah, absolutely. This is probably one of the best stories that I got as a mentor. I'm a student of the game, but the only thing about a mentor is just you've been through the trenches enough to know what to do, what not to do, so you can tell the future student and the next person who wants to take the journey. It's like, hey man, I can teach you a lot. I can teach you a lot because I got battle scars, and that's pretty much the best way to explain how this whole journey started. We took losses, we've learned a lot of lessons but we still here. And now we're consistent, more profitable than ever. And this is exactly the energy that I want you guys to embody going forward, because you should not be afraid of making mistakes as long as you realize these mistakes you can learn from. Okay. And the market is all about data, and the algorithm does not always change. However, let's go ahead and go back to the beginning of the year for a couple of these pairs. We noticed that the market has changed cycles many, many times. In 2020, we noticed that the market mostly was focused on making certain impulses to which they will mitigate and return back from a very close origination, and then they will create higher highs. We thrived off of these moves. It was so simple, but I also want to emphasize the fact that you guys, I noticed you guys tend to catch on with this, with the minor structures, but you weren't as comfortable with the major structures. The reason why I'm saying this is when you notice a big impulsive move right here happens in the market, right? You have to also know anything that happens from here on out as a form of correction is going to be part of minor structure in order to impact the market to make a bigger, more impulsive structure. Okay, so the mitigation, that setup, that's all it is just price making a major impact and shifting from a zone of demand or supply, but they have to do it in a major way so they can stun the participants, which are you and I. Okay, so this is why I wanted to emphasize first and foremost major structures and minor structures that we have talked about plenty times in our webinars, but I just want to carry out how over time this is what was going on. So that's why you have to avoid getting caught up in just what the mitigation was or how you trying to get in at the demand zone and supply zones. And once price does finally make it to its destination, and you're confused, or you're waiting, you stuck on a sell, not realizing that this was the last leg pulling back and mitigating before they create a higher high. So as you guys can see for this pair Euro JPY, from this supply zone right here in June, we saw that price had broken structure from a major structure perspective. All right, so 134.07 had been the resistance or the supply zone to where we saw price broke structure, came back to retest and plunged. This was back in June. And we can see how price plenty times had just broken structure. That's step one, retested. Step two, to which we could have taken any great entries somewhere around here in our stop loss above the range. Now, as you guys know, I'm not typically a swing trader, but that doesn't really mean I don't take swing trades. Okay. It just so happens that once you understand the dynamics of the market on a smaller scale, you have to get out of your comfort zone to understand how you would like to hold on to a trade and why you would want to hold on to a swing trade, because not every trade opportunity you see that looks like a good swing means it's going to be a smooth ride, which is why I don't usually like to hold on to swing trades. However, as I've been refining my skill set, guys, I noticed that one of the best times that you would really want to hold your swing really is when price breaks major structure on a higher time frame, but you have to wait for the deep retracement, because if you caught the first impulsive move, a lot of times, because you think you are swing trading, you would wait for this to pull back. And I ask you why. It's not necessary to to be in such drawdown when you can easily learn to take your profit at the first impulsive move, or you could break even. And lastly, you can close partials on a majority of your positions. All right. So these are the three things you want to do when you are actually considering to swing trade. Because guys, at the end of the day, I want to catch 322 pips and close most of that profit. I don't want to hold on to the trade just because I feel like it's a good swing. Because remember, we're in this for the money, right? The skill set, the knowledge is good, but you don't want to overdo it to the point where you're not making as much as you should. All right. So this is why I highly encourage you guys to think psychologically and gain those reinforcements mentally to know what to do in scenarios. Okay, so what I'm trying to say is this: you are in a sell trade, price drops significantly. There's nothing wrong with taking profit if price is actually going to retrace back and give you another opportunity for that sell. Okay, so while you're focusing on a good setup, it also gives you time to focus on fewer pairs. Because if you feel that the market is indeed going to be dropping and dropping and dropping, then that's your focus for the month. That's your focus for the week, and so on and so forth. Because each time price does retrace after breaking structure, showing signs of continuation to the downside, is an opportunity. We just got to wait for the right retracements to follow through. All right. So how many of you guys are comfortable with your break of structure identification? If not, that's fine. I just want to know so I could work with you going forward into the new year to understand the break of structure. I remember I was asked, what is the difference between a break of structure and liquidity sweep? And we're also going to talk about that a lot more in this webinar. But let's carry on with this pair. Okay, so there's also scenarios where you have to understand, even though price broke structure, it has a destination it needs to go. For example, this was June's supply zone, right? To which we talked about a multi-month supply, or a monthly resistance, aka I'm sorry, I lost my train of thought. Demand zones, when you see monthly demand zones, monthly supply zones, you have to understand these are zones where you're gonna get a good bang for your buck. However, when price does reach the destination of a supply zone, they have to fall back. So you got to be careful, understanding exactly where it is that the market is going after it reaches a certain destination. Within that area, guys, you have to realize too that there's this little shady thing that they do, which brings me to the liquidity sweep topic, is when price has a nice supply zone or demand zone that they get to, plenty times you see them reach a zone that you might have thought was just the remaining supply. And then all of a sudden you see price takes off and goes higher. That's price taking out liquidity that was resting above these areas. So what you guys have to follow up with, if you got your stop loss hit, it happens to everyone, is you have to wait and see what the follow-up is looking like. As you guys can see here, in October, price did touch and retest the multi-month supply zone from June here. And what happened next? We saw price broke structure and rejected off of that, pulled back to mitigate, broke structure again. If you missed out on this action right here, then you can follow up and take your trade, because now we can clearly see that there's more evidence that price is indeed showing you signs of a selling trend, right? On a sell model. So, of course, once that happens, we know we can put stop loss right above. And most of us typically aren't comfortable taking trades with a huge stop loss like 60 pips, which is why it's important to understand your risk versus your reward. If I'm going to have to risk 60 pips, then my lot size is going to have to be a lot more conservative than the trade you would take where your stop loss is like 8 pips, 10 pips, 12, 17, 19, whatever it may be. You have to understand the game. All right, guys. This happens a lot when it comes to US 30, where sometimes I'll call a trade and it's either, they stop hunted us the first time, or guess what? I'm not trying to call it because realistically, the stop loss would have to be 1,000 pips away or 500 pips away, aka 50 points or 100 points away. So then I'll let it slide. Now, sometimes I might take it on my own, but at the same time, you have to understand the game. It's not always going to be fair to you. It's either you learn to let a few trades go, or you have to consider what the lot size is. Okay, so this is what I wanted to discuss when it comes to the psychology of risk management and all that. So, as you guys know, this is a webinar that's just recapping certain things. If you haven't touched base or touched up on mitigations and sweeps, I highly recommend for you all to take a look at these channels that have countless examples, which is available right here. You have your supply and demand. I think everybody's in this one, right? And your supply and demand channel, you'll see that I've analyzed most of the pairs that shows break of structure, retracement, continuation, and supply and demand zones. If you guys need to understand liquidity sweeps, then this channel also breaks it down for you, okay? So if you're not in any of those, let me know so I can add you. And for those who are watching on YouTube, make sure to click on the link below, which is the free channel that's going to show you examples on how to understand liquidity sweeps and supply and demand zones. All right, so let's go ahead and move on to liquidity sweeps because it's all part of the scheme. Guys, I want to say something to you, and this statement is probably the truest statement you'll hear today. You don't have to be the earliest person in the market when a move is happening, because there's a reward for being early sometimes in this market if you are not understanding what's going on. And that's called a stop hunt or a liquidity sweep, right? They sweep you because you are early and you are part of those participants. All right, the number one contestants for you to get your stop loss hit first or twice. So this is why sometimes I highly encourage for you to take some profit off the table when the market is moving, depending on what the idea of your trade setup is. Because, for instance, within a supply or demand zone, you might see price create equal highs. This is how the market makers work to get their money. They create a zone where you can see the resistance, right? And then after the New York or after the Asian session, they've accumulated enough of that zone for them to clearly see where they have to go first before they reverse. So let me go ahead and use this, what's it called? This, right, the brush right here. So everybody sees this zone, right? And just like a shark, see price jumps up, grabs the liquidity that's up there, then falls down. Okay, they lower high, lower low, then they go right back above where that lower high was so they can fall back in. Okay, so plenty times you will notice this happens in a scenario where the Asia range is combined in a zone where there's maybe a supply at the top, to where you will notice the equal high in Asia, or maybe if you are on a 4-hour time frame, it says an equal high area from like several days ago. So price has clearly been accumulating up there. And then boom, you see price go right above and then falls. What you need to learn how to do is wait for the earlier participants, the early buyers, the early sellers, in this case, early sellers, to get liquidated. And then you pull up after the crime scene, then you get it. Okay, so this is going to be a skill that I want you guys to practice, being more comfortable and being patient in certain trade setups. And sometimes the best way you're going to find out is if they hit your stop loss. All right, but I want y'all to be a lot less personal about this market, because you're not the only one who got hit. You just just like Squid Games, you was just one of the participants. All right, it ain't no feelings, baby. It's just business. So as you guys can see, they've done this quite a lot, and that's just how the market works. And you will notice all these subtle lines that you are seeing here were the times where price created a resistance zone, and then you see price go right above it and then fall right back. Okay, so let's fast forward to this month and December. We can see price did have a supply right here, and a lot of us box these zones out, and because of all of that, it can blind us. I will admit it can blind you, and this is why, like, you know, we have our custom indicator that will draw out these supply and demand zones for us. But there comes a time where the zone just disappears. And I'm very grateful for that type of repainting style, because I wouldn't want this box to stay here and confuse me after they've done what they did, ready to break structure. Step one, come down and correct before they carry on to make a higher high. So I was noticing the conversation that was happening in the chat. And last week, some of you guys took a really nice Euro JPY trade, or nice GJ trade, or AJ trade, and didn't realize the break of structure. And going back to what we were talking about, when it comes to this market, the break of structure is a big determinant that price is going to be heading up above. So when you see price take out previous highs or previous lows, right? In this case, previous highs, aka lower high, lower low, lower high, lower low. Once price goes above that, you will typically notice that our indicator, let's see here. Do I have Euro JPY here? No, I don't. But it's the same scenario. Let's go to 4-hour for GJ. You will notice the indicator will let you know that, hey, price just broke previous structure. That's why I want y'all to get used to this indicator going forward, because it's going to really evolve your thinking and help you see things more visually as you're trading, right? Notice that this zone had a nice little red dot that represents resistance. Every time you see a red dot, it represents resistance. Now, what the sun is telling you when it gets white hot or green, or green or blue, is that whatever previous resistance that was there just got taken out and liquidated, and price is going to reverse. So like a game of ping pong or pinball, you see price bounce, pull back in here. What did it do? They did the same thing. This is what the indicator is telling you. The indicator is telling you, hey, this demand zone or this support just got liquidated right here, following up from here, then here, and now price is buying. And since this is a major structure, we had major results. So from here, price broke structure again on the 20th, Sunday, and bounced off of this demand that's drawn out for us. And then ever since then, price has been buying, and you can hold this kind of trade until you see the blue ray. So if you've been wanting to elevate your game, you want to learn how to swing trade, there it is. And I'm super grateful that I came up with every component that needed to be added for this custom indicator for you guys so you can succeed going forward. And it's never been so simple for y'all to understand what exactly is going on because the indicator is talking to you. All right. Joe, have you heard from man, I'm trying to remember. Your guy.
Trey?
Yeah.
Yes, I have actually.
Yeah, we got to talk to Trey because you know this indicator is definitely got to be caught soon.
All right, bet.
Yeah, for sure. I remember he was asking, man, I'm still struggling with swing trading, and this is gonna help. All right. So guys, I'm super excited for y'all to have access to this indicator. Shout out to some of y'all who already have it. It's gonna be a game changer. It's gonna be a game changer. Trust in me, because some of y'all already have it. You see what's going on. You see how it's improved your trading game, and I can't be any more proud. Okay, so let's jump back in the regular trading view. This is exactly what's going on right now for Euro JPY. Okay, quite synonymously, we can see that NZD JPY is doing the same thing. But if we stick to just a smaller time frame and not just go to the smaller time frame to see that this is just minor structure playing out, we're never going to be able to know when it's time to hold on to a good trade. Okay, now let's bring it back to the liquidity sweep. Notice how price had created a perfectly good looking support area, right? But as the follow-up happened, we saw price broke structure. This structure right here got broken in a major way. That's step one. Step two, pullback. And this is one of the variations where we talk about where price makes its way all the way down to the demand, just like price was doing it for the supply zones, takes out liquidity. That should be a sign for you to be like, oh, shoot, okay, I see what's going on. Break a structure, step one, pull back to mitigate, not just take out the lows, but they return back to the demand zone. So the next step that's going to happen is obviously a higher high, because this is still a higher low, even if it seems like price just changed down here. So that's the difference between liquidity sweep and a break of structure, right? Because even if price is breaking structure, it's still sweeping liquidity, but it's all about the direction price is actually trying to go based off of the destination it got to. What are the destinations? Supply and demand. Does that make sense, or is that confusing you guys?
No, that's perfect.
So just like the market bounces from one zone to the next, when they make it to those destinations, you have to also get the confirmation you're looking for. Questions always pop up like, how do I know this is not going to continue down? Well, you can't have that unless there's a break of structure. So now, one of the main things to do is wait for the retracement. Then you take the buy and your stop loss below the previous low. Why is that a good stop loss to take? Well, this is a demand zone, but once they're done taking out stop losses that were accumulating here, their job is done, and 9.5 times out of 10, after they've done committing this murder over here, they're done. They're full and ready to make a new objective, which is create a new higher high, which so happens to conveniently work for them because that also takes out liquidity from this higher high. So they basically, it's just like the market makers throw money, right? And then they come back to grab it. They come back to grab it as they are creating a new path. Okay, so this is why you have to understand how it all comes together. Major structure and minor structure work together, but once price finishes returning down to a zone of demand, for instance, and corrects itself, that is the completion of the minor structure correction, which we call mitigation, right? Which means step 2 is done on a major structure. We're going to see a higher high. Is that good, Greg?
Yes.
Right. So this is why, like, even though, we're taking these beautiful trades and, we noticing that there's a supply here, which there was, and price did go above this area to take out the liquidity up here. But at the same time, they are respecting this demand and they are working their way to create more higher highs. Okay, which is why when you're looking at the indicator, it helps for you to identify these things. So I'm going to put AUDJPY on the map. Okay. All right. And you guys can see that it's also giving you more of a confirmation to understand what it is that's going on. What do we notice? We notice that there's a green sun, right? So the green sun tells you that there's a major area of resistance here. The green ray is what really helps you understand that this is true. The green sun by itself shows you that there is support. Sorry about that. But the green ray tells you if price just came from the zone here and you seeing this green sun and the green ray, you're going to take the buy because it's also telling you that before it reverses, it had liquidated whatever liquidity that was resting down here. So when price creates a higher high, you see that the sun gets white hot from a zone that was a major or strong resistance. Okay. Now, in the case of a demand zone or support, I'm not saying support is the demand zone. I'm just saying this area of support, right, which is also a demand zone, got liquidated. So if in the area where the green sun the next time turns white hot, that's telling you not only did this support get liquidated, but we also have a reversal coming that's even stronger than the green sun and the green ray. Okay. And then if there's a white hot resistance or a green sun and a green ray, and price makes it all the way up to a supply or a demand, and the ray turns blue, then that means we finally reached our peak formation high or peak formation low, to which we might as well expect a big sell-off from that. That's what the suns are telling you. So as you guys can see, at the resistance right here, there was a green sun. This green sun is a resistance or a supply zone from November of this year. So when price finally made it up here, they took out liquidity, which is why you can see the blue sun and the red, the blue rays and the red sun. Okay. And when it comes to these liquidity areas that keep getting taken out, this indicator helps for you to realize also that once they do this kind of savagery, we can notice that the sun is speaking to us, letting us know that, hey, this zone that was resistance, yeah, it got taken out and there's a reversal coming. Hey, good looking out, my guy. I'm going to take that sell, put my stop loss above a previous high or behind the sun. And this is why we can see price sold off. Does that make sense, everyone? This is how the sun is helping you to understand what it is that's going on in the market besides the knowledge that you've already gained here. Okay, because there will be times you're just thinking, hey, supply, demand, supply, demand, supply, demand. Oh, yeah, you took a sniper entry sell right here. You caught beautiful pips. That's great. But let's say the white ray pulls up. You're like, whoa, 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 whoa. Uh-oh. Time to close my profits and get ready for a buy now, especially since not only is it bouncing off of not only is it liquidating in this area and the sun popped up, but we can see that there's also a demand zone box that gets drawn automatically on these charts. So this is why I can't wait for y'all to use this going forward. Next year is going to be a game changer, right? I don't even want to talk about GN. GN was really a pain in the neck. However, with all this resistance from the bottom, right? So might as well call it demand. We see that even though we thought GN at one point was going to be as bearish as can be, that's not really what the market makers have the intention to do, right? So as you guys can see here, GN looks more bullish than we once thought. So manually, I have to get rid of this supply zone so I can see better, right? Because now it seems like GN is heading into all-time supplies from 2020. And once it makes it here, I'm pretty sure it's going to go above and beyond because there's liquidity right up here. Okay, so for those who have been trying to sell GN like I was in the first couple weeks here, you have to change your bias. Okay, because there are two things that the market does when it's ready to change character. You can see at times that price had some equal lows, and what happens next? Same thing. They took it out and came back to mitigate. So I'm thinking price is going to be bearish, and I'm ready for it. But when you see price change up again and use this as demand, then the game doesn't change, and you got to adjust. It sucks because on a 4-hour, you see how many wicks and how nasty these candles look, right? Yeah, it wasn't too fun. That's why I say you can never go broke taking profit as you understand what's going on and deviating from whatever bias you may have once had, because it doesn't matter. It's what the market makers want to do at the end of the day. All right, so I'm going to move on from GN. There's really not much to talk about here. Let's move on to US 30, the crowd's favorites. All right, so US 30 has definitely been a pain because at once we had thought that price not only was just going to be making a new high, but at first they started dipping. But the dip was not random because as we can see, even though price did take a beautiful 2,300 point dip, that's also price retesting a demand zone, which on the 1st of December, they got to the zone, bought, came back, took off, made their way to the supply zone, and they fell off again, right? At first, I was thinking maybe they'd retest down here, but this is the order block that they decided to work with. And as you guys can see, price swept, and then they bought and broke the structure, which is why you can see now that price is not bearish after all, it's bullish. So here's a few details I want to emphasize because this isn't hindsight. US 30 is one of the prime examples of why price will show you a good time and take it from you. So that's why you have to also learn the benefits of understanding liquidity, because US 30 is notorious for creating a lower high or creating um, a false demand zone before New York and then take us out. So that's why, like, you have to wait even after the 930 to locate your equal highs and equal lows before you make any sudden movement, right? Because even this morning, we can see that price started off with an impulse, came back, but this little zone right here, this little area of support right here, they took out before they continued. Or you can see here, if we go to a 1 minute time frame, this area is going to look a lot more smooth. Here we go. We can see on a smaller structure time frame, we can see price with the same thing here. Broke structure, came back to sweep, and then that's when you should have taken your buy. And if that's 112 points you wanted, there you go. But of course, price did carry on. And this is where we're at right now. So guys, if you're looking at US 30 plenty times, you will notice that the goal is to get in the trade. But even if you do get stopped out, you can follow up maybe a few hours. If price does retest the zone, the order block area, and retest it a second time, you can take the buy. Because remember, after they sweep, it creates a reversal pattern right under, then that means their job is done. They're about to take the market up. Right? So you have to be careful and learn to identify when price gets swept so you can take these reversals. I remember last week, the indicator showed a blue ray and a green sun. I was like, no way. Soon as the market opened, price took off running to the top. Take out liquidity from here and here, and then they reverse right back. That was the most gangster thing I've seen in a minute, right? But it goes to show you, be a lot more patient with your trades when it comes to waiting for price action to do what it needs to do. Because most times you get stopped out, it's because you were an early buyer or early seller, and because you were so married to your trading buys, you're like, I'm gonna hold it, I'm gonna hold it, I'm gonna hold it. And then price starts to pull back. And you get uncomfortable, you close with the smallest profit. Might as well just take your profit when it's the most convenient and the maximum profit at the time. And then you'll get back in later, because if price is sweeping just to go back higher, then what's the point of sticking through a drawdown that's not going to do you any good? All right. As Ray was saying, you got to learn to hold out when the market is red, but you don't always have to do that if you are entering into like a good trade setup, or maybe let's say your account's capital is not as large. You want to take your positive equity profits. Make sure when you take your profits with the intention on getting back in with the right condition. Does that make sense, guys? Okay, because one thing for sure, two things for certain, price will do that going forward into the new year and the year after that. So you got to learn to adjust. One of the best times this thing looks very clear is when there's a demand or a supply, and then they create a lower high, and then they go take it, reach the resistance or supply, and then you can take the sell, put the stop loss right above, expecting a lower low, expecting price to also go sweep whatever was under there. Same thing for buys, right? You will see there are variations at times, but you see price breaks structure, step one, pulls back, takes out some liquidity that was here as well. So let's say your entry was here, that's when they would have taken you out. So now they've taken you out. Typically, it happens so quick, you don't get a better entry, but at least if you're thinking about getting back in, your stop loss can be below the previous crime, below the previous sweep. And then boom, got 432 points. Now, guys, we know it doesn't always happen smoothly. I just want y'all to understand that once price sweeps, you have a chance to get back in. And you also have an area where you can put a good stop loss as price does what it does. All right, so don't be naive into thinking that you see a lower high and it's just an innocent lower high. No, this is exactly where everybody sees it, especially when it comes to like an Asia range. And if price comes above it to take it out in London, take your reversal. Take your reversal. All right, so learn to identify these. And if you have the software will transition and translate that for you. What is this, the 17th? All right, let's go check this out. What time frame? 15-minute time frame. Let's go to 15-minute time frame on the 17th. You guys are going to see exactly what that looks like on the 17th. All right. So boom. This was the Asian range. Wow. 17. Okay, good. This was the Asian range. Stop playing with me. Sorry about that, guys. Oh, okay, I see what's going on. Right. Okay, this was the Asian range. And as you can see on the 15-minute time frame, it just shows that to you as a regular resistance. But on the 5-minute time frame, we can see that same zone has a lot more character. Oh yeah, right here. And right there from the Asian range, you saw that price showed not only a resistance, the sun had a green ray around it, which tells you, yo, bro, or hey, queen, sis, they just got liquidated. Oh, Lord, they took out these stop losses, these early sellers, the ones from the Asia session. All right, so then when you see this, you can take your sell because you know what's going on and you stop loss above the previous high or whatever's convenient at the moment. Okay, so the same rules apply for demand zone situations and so on and so forth. All right, so guys, I wanted to make sure you understand these concepts. And when you are trading, you want to build a certain type of confidence and posture, right? Because you can't just be taking any type of quality of trades. You have to take it because you understand why and you've seen it before and it works, right? Last example. Do you notice how this was a demand zone, right? It was a support area. There was a green sun and a green ray here. Price starts dipping. And then we see a white hot ray, a green sun. That means this support area just got liquidated. And there's about to be a big reversal. That's what happened. So get comfortable with your indicator. get comfortable with your software, and I'll promise you, whatever pips you think you caught in 2021 or in 2020, you ain't seen nothing yet, y'all. You have not seen nothing yet. So who's excited for a 2022 filled with all kinds of filthy pips and great withdrawals going forward? If that's you, definitely drop some 7 on the chat. I'm pretty much done here. I will open the table for discussion, and then we'll be out. All right. So, any questions?
Any questions?
Any questions? Any questions? Any questions? What was your favorite pair this year? Which did you profit the most off of? Which pair gave you the most trouble? Which one gave you the most headache? I know it had to be US 30 for some of y'all. If you are, okay, make sure you are unmuted when you want to speak. Go ahead, Joe.
We've been just trading crypto mostly.
Search.
Yeah.
Which one?
So XRP. Yeah, pretty much which one? XRP, XLM, Doge, and we haven't traded sheep. Oh, so she just started trading sheep because sheep's up for trade now. I think I traded some. Did I say XRP? I think I said that. Litecoin. Anything that's available to trade through the broker, I trade. Pretty much try to trade it.
Which broker are you still using? Hugo's way?
And KLT Forex.
That's what I thought. Yeah, shout out to KLT and Hugo's way. It's still holding it down, giving us the opportunity to trade cryptos. And I'm very happy to also let you guys know that the indicator also shows you what's about to happen for Bitcoin and Dogecoin, whichever cryptos, because as you can see, the Blu-ray, that joint, when it tells you what time it is, it's that time. It's that type of time. Notice how the Blu-ray happened right here. What is this telling you? If you were following, do you understand what that's telling you from the green to the blue? Right here.
Oh, it's telling you right there in that part?
Yeah.
Yeah, we about to go a little bit bearish for a minute.
You said pull up Dodge?
No, I said we about to go bearish on that part right there on Bitcoin.
Right. So what that means also is like this area got liquidated before it reversed. And that's a big determinant, because that's how price moves. They have to sell to buy, and buy to sell. So to understand that, you have to understand when they're selling to buys, they're liquidating lower at a better price for them so they could go up, just like a trampoline. So the beautiful reverse of that was, at the same time though, it just broke structure. So whenever it's time for Bitcoin to slide, and they either gonna slide from here, or they just might dip down back into like the 48,000 one more time, or even deeper at the 45,000s. To which, if this white ray gets retested and liquidated, it's gonna turn blue. The ray's gonna turn blue, and that's when we'll know for sure that Bitcoin is getting ready to head up to like the 65,000s to 70,000s, and so on and so forth. And most of the other altcoins should follow through. So we'll see. this is all speculation. We are not financial advisors, but this is what we are most likely looking to see. So yeah, man, definitely keep on the lookout for that. Sheba is, man, Sheba not doing much, but when we least expect it, the time will come.
Well, she one of those sleepers.
Right.
And once they burn, it's too much circulation right now. But once they start to burn, then the price will start to move more.
Yeah, that's a fact.
Right now, it's a pump and dump.
Yeah. That's what it is. That's what it is.
Yeah.
Yeah, man. But so if there's no more questions, guys, I admire and appreciate all of you guys who put in so much work into your craft, and no good work goes unpunished. You will be rewarded for the effort that you put. And now that you guys have access to this amazing indicator, I'm expecting to see nothing but profits, great results, great withdrawals, and guys, let's have a strong, profitable, and healthy 2022. So thank you for hopping on. Y'all have a good night, and we'll see you next time, okay?
All right.